This video is about Mitsubishi Corporation's fiscal year 2024 full-year financial results, period from April 2024 to March 2025. Mitsubishi Corporation is Japan's largest trading company, Sogo Shosha. It is part of the Mitsubishi Group and engages in a wide range of businesses, including energy, metals, machinery, chemicals, food, and finance. Mitsubishi Shoji operates globally, investing in various industries and managing supply chains. Mitsubishi is one of Sandai Shosha, which means Big Three trading companies in Japan, along with Itochu Corporation and Mitsui & Company. Executive Summary. In FY 2024, Mitsubishi generated an underlying operating cash flow of 983.7 billion yen, demonstrating strong core business operations. Additionally, the company reported a consolidated net income of 950.7 billion yen. Mitsubishi successfully achieved all the quantitative targets set out in its midterm corporate strategy 2024, showing strong execution of its strategic plan. FY 2025 forecast looking ahead. Mitsubishi forecasts a consolidated net income of 700 billion yen for FY 2025. This decrease from FY 2024 is mainly due to the absence of large capital recycling gains, such as asset sales or one-time profits that contributed to the previous year's income. Despite this, Mitsubishi expects to generate an underlying operating cash flow of 900 billion yen, which will be primarily driven by steady growth in its non-resource business segments. FY 2025. Shareholder returns. Over the 3 years covered by the Midterm Corporate Strategy 2024, Mitsubishi accumulated free cash flow of 0.7 trillion yen after shareholder returns. This substantial amount will help fund a 1 trillion yen share repurchase program, recently announced as part of its commitment to returning value to shareholders. Additionally, the company plans to increase its dividend for fiscal year 2025 to 110 yen per share, which is a 10 yen increase from fiscal year 2024, further reinforcing its focus on enhancing shareholder returns. It's great that the annual dividend was raised by 10 yen to 110 yen, but it's disappointing that net profit forecast for this fiscal year 2025 has declined to 700 billion yen. Summary of fiscal year 2024 results and fiscal year 2025 forecast. In fiscal year 2024, Mitsubishi Corporation's underlying operating cash flow decreased compared to the previous year. This was mainly due to lower sales volumes and worsening market conditions in its Australian steelmaking coal and ASEAN automotive businesses. However, the consolidated net income remained roughly the same as in fiscal year 2023, largely thanks to significant gains from capital recycling, selling, and reallocating assets. For fiscal year 2025, Mitsubishi expects to generate 900 billion yen in underlying operating cash flow, slightly lower than the 983.7 billion yen recorded in fiscal year 2024, due to expected lower earnings in resource-related sectors. The company's consolidated net income is forecast to decline to 700 billion yen in fiscal year 2025, compared to 950.7 billion yen in fiscal year 2024. Despite the expected profit decline, the annual dividend will be increased from 100 yen per share in fiscal year 2024 to 110 yen per share in fiscal year 2025, and Mitsubishi plans to carry out share buybacks totaling 1 trillion yen during fiscal year 2025. Summary results by segment consolidated net income. Mitsubishi Corporation reported a consolidated net income of 950.7 billion yen for fiscal year 2024. The main changes in performance across its business segments compared to the previous year are as follows. In Environmental Energy segment, net income dropped by 17% to 198.6 billion yen, mainly due to the absence of gains from a subsidiary liquidation in Malaysia LNG and falling market prices in the shale gas business. In Mineral Resources segment, income fell by 23% to 227.8 billion yen as a result of lower volumes and prices in Australian steelmaking coal, partially offset by the divestiture of 2 Australian coal mines. In food industry segment, net income surged to 92.4 billion yen, a sharp increase driven by the absence of prior year impairment losses in overseas food operations, recovery in the salmon farming business, and divestitures of KFC Holdings Japan and Princes. In Smart Life Creation segment, net income increased by 80% to 185 billion yen, mainly due to gains from reclassifying Lawson convenience stores as an equity method affiliate. In Power Solutions segment, net income decreased by 113.5 billion yen, mainly due to absence of prior asset sale gains and losses related to the Japanese offshore wind power business. Full-year forecast by segment, consolidated net income. For fiscal year 2025, Mitsubishi forecasts a consolidated net income of 700 billion yen. The expected year-on-year changes in key business segments are as follows. In Environmental Energy segment, net income is projected to decline by 20% to 158 billion yen, mainly due to lower crude oil prices, reduced LNG volumes, and higher depreciation in the North American LNG business. In Mineral Resources segment, a sharp 50% drop to 114 billion yen is forecast, primarily due to the absence of gains from the sale of Australian steelmaking coal assets in the previous fiscal year. In Smart Life Creation segment, net income is expected to fall by 59% to 75 billion yen, reflecting the lack of the prior year's revaluation gain from reclassifying Lawson as an equity method affiliate. In Power Solutions segment, net income is forecast to rise to 28 billion yen, supported by the absence of previous impairments and losses in Japanese offshore wind projects. One reason for the projected decline in profit for fiscal year 2025 is the absence of one-time gains recorded in fiscal year 2024, such as the sale of coal mine operations, the divestiture of KFC, and the revaluation gain from Lawson convenience stores. The offshore wind power business in the Power Solutions segment, which has been struggling for some time, is expected to see a profit increase in fiscal year 2025. So hopefully they can make good progress. Notice regarding result of tender offer for own shares. Mitsubishi Corporation conducted a tender offer to repurchase its own shares from April 4th to May 2nd, 2025. Tender offer is a public offer to buy shares from shareholders, usually at a specific price and for a limited time. As a result of the tender offer, apparently Tokyo Marine and Nichido Fire Insurance sold all of its 85 million shares, which accounted for 2.16% of Mitsubishi Corporation's total shares. In addition, Mitsubishi Logistics Corporation sold 7 million shares out of the 14 million shares it held, representing 0.18% of total shares. The tender offer price was 2,291 yen per share. This tender offer is also for the purpose of unwinding cross-shareholdings, and this was part of a broader share repurchase plan with a maximum budget of 1 trillion yen. After completing the tender offer for approximately 230 billion yen, Mitsubishi plans to repurchase additional shares worth up to 786.7 billion yen through market purchases on the Tokyo Stock Exchange. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 2,640 yen as of May 2nd, and the US dollar stock price is $18.30 as of May 2nd. Current PBR is 1.12, and PER is 15.0. Dividend yield is 4.17%. Compared to the last few years, since a decline in profit is expected for this fiscal year, the current stock appears overvalued in terms of its PER. However, based on the PBR and dividend yield, the current stock price is relatively cheaper than before. With the recent dividend increase, a 4.16% yield makes it a high dividend stock. Conclusion. It's unfortunate that Mitsubishi has announced a profit decline forecast, especially after several years of strong performance. With resource prices trending downward, there are growing expectations for the company to strengthen its non-resource businesses for the future. Mitsubishi still remains financially solid at least, with robust cash flow and an equity ratio exceeding 40%. From a shareholder perspective, the 10 yen dividend increase is a positive outcome at least. Additionally, Warren Buffett's Berkshire Hathaway recently declared its intention to hold Japan's 5 major trading companies, including Mitsubishi Corporation, for the next 50 years or longer, which should provide some support for the stock price going forward.